All right, let's talk about J Benjamin Holdings. The Asian retail giant just had a really tough year, and their latest financial results for 2025, well, they tell quite a story. We're going to dig into exactly what happened.
Okay, let's not bury the lead here. This is the number that just jumps right off the page. A net loss of $16.6 million for the year. I mean, wow. That is a huge red flag that tells you things are not going well at all.
And if you think that number is bad on its own, take a look at this. This chart really puts it into perspective. The loss didn't just grow, it exploded. It went from $6.1 million last year to $16.6 million this year. That's nearly triple. So the big question is, how on earth did this happen? What's behind this massive jump into the red?
So to figure that out, you've got to start at the top. Let's get into the core results of what was clearly a super challenging year for them.
And boom, here's the root of the problem right here. Their revenue, it just fell off a cliff, down a whopping 23%, from over $78 million to just about $60 million. I mean, think about that. Losing almost a quarter of your total sales in a single year, that is going to send shockwaves through the entire company.
Yeah, a 23% drop in revenue doesn't just happen by accident, right? There have to be some serious reasons. So let's unpack exactly what the company is saying caused this major slide.
And it looks like it was kind of a perfect storm. You've got a few big things happening all at once. First, people just weren't spending as much, weak consumer sentiment. Then, the company itself was shutting down stores that weren't making money, which of course lowers your overall sales numbers. And on top of that, the Singapore dollar was really strong, which basically meant it was cheaper for locals to shop abroad. The result? Sales just plummeted in their key markets, down almost 33% in Singapore. That's huge, and 10% in Malaysia.
This table, this is where it gets really interesting, because it shows you exactly where the pain is coming from. Just look at that top line, ongoing retail. That's their bread and butter, their physical stores. The losses there went from about $650,000 to almost $3.3 million. They didn't just double or triple, they multiplied by 5. So yeah, while other parts of the business weren't great, the real bleeding was happening right there on the shop floor.
But the trouble didn't stop with the stores they owned directly. Nope. The ripple effect went further, hitting their partnerships too. And there was one in particular that was a major drag on the books, their associate in Indonesia.
And you can see the damage right here. The portion of the loss from that Indonesian business that J Benjamin had to put on its own books, it more than doubled. It went from $1.2 million up to $2.6 million. That is another huge anchor pulling the whole group's performance down.
So, what went wrong in Indonesia? Well, it's a familiar story, but with a twist. You had sales down, lower demand, which means they had to slash prices, and that just crushes your profit margins. But they also got hit by currency issues. The US dollar was strong, making all the stuff they import way more expensive. And then, to make matters even worse, J Benjamin's own exports to that business dropped by $6 million. That tells you the whole supply chain was slowing to a crawl.
Okay, so you've got falling sales, huge losses, and struggling partners. You'd think that's bad enough, right? Well, hold on, because on top of all of that, the company dropped a bombshell. A piece of news that doesn't just affect this year's results, it changes the entire game for their future.
This really was a massive shift, a turning point that is going to dictate what happens to this company for years to come.
And here it is, the big one. They've mutually agreed to end their relationship with, guess, that's right, the massive fashion brand. By the end of 2025, J Benjamin will stop all retail and distribution for Guess in both Malaysia and Indonesia. This is huge.
And don't just take my word for how big a deal this is. Listen to what the company itself is saying. They call Guess a significant brand and admit that losing it will have a material financial impact. That's corporate speak for this is gonna hurt a lot. You're not just losing a brand, you're losing a foundational piece of your business.
So where does this leave them? You've got massive losses piling up, and now a key brand partner is walking out the door. They are sailing in completely uncharted waters. So, what's the plan? How do they navigate this?
Well, the headwinds they're facing are just immense. We're talking continued weak demand from customers, rising costs for everything, and competition that's getting tougher by the day. And remember, all of this is happening before the full impact of losing Guess even hits their bottom line. It is a really tough spot to be in.
So what's the game plan? Well, management has laid out a 4-point strategy. It's really a mix of defense and offense.
On defense, they have to get a handle on costs and right-size their operations, which, means making things leaner and more efficient. And on offense, they've got to go on the hunt. They're actively looking for new brands to bring in, and even looking at getting into food and beverage to try and plug that giant hole that Guess is about to leave.
And that really is the big final question, isn't it? They have a plan, sure, but can they actually pull it off? They're trying to reinvent themselves in a brutal retail market right after losing one of their star players. So, can FJ Benjamin find a new path to growth? Or are the challenges just too much to overcome? That is the $16.6 million question.